option strategies. We do trade few stocks, but mostly options, and I also have an alert service. And we're going to talk about that today. And actually, I cut my trading day short so I could do this. Market closes at 4 o'clock. Usually, I'm in the room every day from market open to market close, which is kind of rare. There's not too many rooms that I know of where they have a professional trader in there all day long to help with traders. We answer questions, look at charts, etc. So let's get this started. Appreciate everybody being here today. And I'll leave the question box open in case anybody has any questions along the way. I'll try to answer them if they're they're related to what we're talking about. Okay, so again, my name is Dave Wise. I've been trading professionally for almost 16 years now, and I trade almost exclusively options and option strategies. Do some stock, and we're going to show you how we're able to maintain this this win rate. We have an 85 to 90% win rate I have had for the last multiple years, and we'll show you some of the results we had with this strategy and what the strategy is and how you can take advantage of it. All right, so moving forward here, first thing I have to do is the thing you've probably heard today a few times, the disclaimer. All signals and trading opportunities we provide here are for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors, so we won't give financial advice. All right, and if you have any questions along the way that I can't answer them, if you put your name and phone number or your not Skype anymore, but your Teams username in the chat box, Rory from Right Line will get back to you and answer any questions that you might have, relative to something that I can't say. I should be able to answer most of them, unless it comes down to the purchases and the pricing on it, et cetera, things like that. We'll go over that later, but he can answer any of those. And I'll put this back up again at the end of the presentation in case you need it. All right, and this just is an alert service. This is just kind of a graphic of the alert service. It's called the Compass Alert Service. The software that I'm going to show you is called the SPY Super System now. It initially started out as a Compass system. It's been changed and improved quite a bit since then, but I still call it the Compass Text Alert Service, and this is where you would get alerts on the high probability trade setups that we take, and they come right to your phone. I'm actually a member of the alert service, so I can see how long they take to get to me, and when I send them out, they take about 5 to 10 seconds to hit your phone. Okay, the first thing I'm going to cover here is maybe redundant if you've been in any of my webinars before, but I think this is really important for traders to understand. And this whole point of this particular slide is to understand what moves markets, what drives markets, bullish markets, bearish markets, choppy markets. How do they occur? What's driving those things? So the market is made up of two different groups. Retail traders, small retail traders such as myself. We're these little marbles here. And then the big marble here, these are the institutions. And we're going to go over what these institutions, who they are and what they consist of. But the important thing to understand is if the institutions aren't in a trade in force, and what I mean by in force, I mean multiple institutions trading the stock in the same direction. You can have a stock, an institution buying Apple and an institution selling Apple. That's not going to give you any direction. But when the institutions are basically ganged up or grouped, and they have a confluence of them taking trades, that's what moves the market. And our job as retail traders is to identify when those are occurring and take advantage of those trades. And a lot of times you get choppy days where there really isn't any movement to the market that's of significance that's being driven by the institutions. But the important thing to understand is if the institutions are not in the trade and retail traders are basically in there trying to drive the market, we can't do that. All we do if the retail traders are in there's tens of millions of these traders, if all the retail traders in the world are making trades, we're not going to move the market. Until the institutions get in, we're not going to make it. So we don't want to be in trades with just retail traders because we have no edge, we have no advantage. We'll take our money off the retail traders when the conditions are correct. But when you're in there with just retail traders and no institutions, you can't judge which way the market's going to go. So this is what makes the market. The institutions are what pushes the market. Now the institutions, just to make sure you understand what we mean, those are the big players such as investment banks, JP Morgan, Morgan Stanley, Bank of America, HSBC, Wells Fargo, all these big banks, these are institutions. All right, now in addition to the investment banks, you also hedge funds, and there's hundreds and hundreds of hedge funds that also are part of the institutional group. You have pension funds. And pension funds are a lot bigger than people realize. You have fireman pension fund, police pension funds, state worker pension fund. There can be pension funds for lots of different things, but they have billions of dollars to trade and invest. And the last thing would be mutual funds. T. Rowe Price, Vanguard, these big mutual funds have huge amounts of money. And these are the folks that drive the market. When they're in there in force driving the market. So our job as retail traders is to come up with a good way to find out with fairly high percentage accuracy when the institutions are moving a market and when they're not, so that we can take advantage of it. And all we're really going to do is basically ride their coattails when they're pushing the market up and pushing the market down. Okay, so that's very important to understand, because this is what we try to identify with the SPY Super System software that I'm going to show you. All right, now this is a, I know this is, people say, what in the world does this got to do with trading? This is a blackjack table, ace and jack of spades, nice blackjack, couple $100 chips out here. So what has this got to do with trading? Well, if you're a new trader, or you've been trading or talking about trading, if you talk to anybody that you know, whether it's your family or friends, etc., about what you're going to do, you're going to hear a lot of times that trading is gambling. It's fixed, you can't beat it, it's rigged, and it's like gambling. So is trading stocks and options gambling? Well, I'm going to use this analogy. When I was very young, much younger, way younger than I am now, I made my living playing blackjack. I was a card counter. I played in Las Vegas. I lived there for a couple of years and made my living as a card counter. All right, and this, by keeping track of cards, and just to understand, card counting is not counting exact cards. What you're doing is you're tracking the cards as they're removed from the deck. So when the little cards come out, which would be the deuces through sevens, then as those cards are removed from the deck, that would increase your count. And when the big cards come out of the deck, the tens through aces, that would reduce your count. So if you have a deck that has a plus count, that means there's a lot more little cards been removed than big cards. That means the edge goes to the player. The player gets an edge when the little cards are removed from the deck. So I'm not going to go into a lot of details about it, but what this means is by having a way to track that, you have a mathematical edge over the casinos by knowing the cards are in my favor, right? So I wasn't trading as a gambler. I was trading as a house. So basically, I had an advantage over the house when the deck was in my favor, and that's when I bet big. And when it wasn't in my favor, I just bet the minimum. Now, the reason I say this, trading stocks and options is very similar in that without knowing what the institution is doing, the trader has no edge. And so in essence, they're gambling. In both playing blackjack and gambling and trading options, trading stock, whatever you're trading, both of these require discipline and emotional control. It's very critical that you have able to maintain discipline and emotional control once you have a method and a strategy set up, right? Now the SPY Super System is what I call my card counting system. This is what I use to identify when institutions are in the trade. And this is what gives me an edge over all the other tens of millions of retail traders and allows us to become consistently profitable traders. And this is the key, being consistently profitable. Very, very important. And the SPY Super System, the software, in conjunction with identifying the best high probability trades, can lead to consistent profits. And that's what I do is I do technical analysis on stocks, and we find the stocks that are the best stocks. So we'll go over that. But that's why this slide was pertinent as far as I was concerned. It tells you that both gambling and trading stocks can both be gambling unless you've got an edge. Okay, so we have a couple of rules to trade by in the room and on the alert service. First one is we trade the best and skip the rest. We've got to find the very best trade. That's found obviously by finding stocks that institutions are in, and also trading in a time when the market has a direction to it, a trend to it, as opposed to choppiness. And then skip the rest. And this is really kind of overlooked a lot of times by traders. But if you have a methodology to find good trades, and you only take the very best trades, there's going to be a lot of times where you're not trading. You're not going to be taking trades. You're not going to have a trade on. And what you find out is by skipping the rest, You're avoiding trades that would have been a loss. And avoiding a trade that's going to be, we could have been a loss, is just as good as taking a winning trade. What's really bad is getting impatient, figuring I need to have a trade on, I'm a trader, I have to be trading all the time, and taking mediocre trades to try to make money. And you're burning up capital, you're burning up you're tiring yourself out looking for trades that aren't there, trying to invent trades. So that's important. Trade the best, skip the rest. And again, here's another one. Our objective is not to make trades. Our objective is to make money. In our room and on the alert service, our objective is we don't care about how many trades we take. I mean, does anybody care if they're going to make $1,000 a day if they do it in one trade or if they do it in 4 trades? But they don't have to take 20 trades to do it. So our objective is not to make trades. Our objective is to make money. And we do that by finding the best trades. And this is important. This goes to one of the big problems that most retail traders have, and that's over trading. They take too many trades on days. Today was a day where there was basically very few trades you should be taking. There was some bearishness this afternoon that you could do some intraday short-term trades. But for swing trading right now, extremely difficult because there's no pace to the market at all, right? So our objective is not to make trades. Our objective is to make money. Please be patient. Wait for the setups to come to you. All right, and maintaining discipline. Now this is important. When I say maintaining discipline, what I mean is once you've learned a strategy and internalized a strategy and a method to trade, which we're going to go over exactly what those are, you've got to stick to it. You don't want to be wandering off, watching, reading something on X, on any social media, or reading something listening to something on CNBC or Bloomberg, or listening to your brother-in-law's cousin and uncle who just found this really hot stock, and you really need to take this one. Maintain discipline. Stick to the strategies. Stick to the methodologies. Don't be listening to other people. I'll tell you a truth here right now. With all the analysts that are out there, and all the things you hear on CNBC and Bloomberg and Fox Business, and where you read on social media and all these gurus that trade stock, they don't know any more about what the market's going to do than you do. They don't have any idea any more than you do. They do it as a job. They get paid for it. Look at the analysts. You get thousands of analysts analyzing stocks, and you come up there with half of them will be bullish, half of them will be bearish. So trust in yourself. You know as much about what the market's going to do as they do, which is nothing. We don't know what the market's going to do, at least longer term. All right, so we learn the process and we follow the process. And I'm going to show you exactly what that is. And the last thing is, as I've mentioned already, remain patient. Please be patient. Wait for the stock trades to come to you. Don't be trying to force trades. Okay, now as a profitable trader, we need an edge over other retail traders. Our edge is pretty obvious. The SPY Super System software that I'm going to show you identifies when institutions are in the trade and when they're not. We also trade what's called relative strength and relative weakness. Now, this is not RSI. A lot of traders confuse this and they think it's relative strength index, RSI. I don't use the relative strength index at all. I don't use Fibonacci at all. I mean, I've been doing 85 to 90% win rate, and I don't use any of those standard ones. But I do trade relative strength and relative weakness. And what that means is, if you look at a stock, how is it trading in comparison to the SPY that day or that in that 5-minute period? If you're going to, the SPY is moving sideways and down, and you've got a stock that's moving up, stacking green candles, it's got relative strength to the market, and vice versa in relative weakness. If you take trades that have relative strength or relative weakness, relative strengths when you're going long, relative weakness when you're going short, it's going to increase your edge over the rest of the traders. Again, very few retail traders do this, and it's amazing to me that most retail traders don't understand what real relative strength is and take advantage of it, but they don't. Okay, trading with the market trend. Well, that's obviously important. Trade with the trend. If the market's choppy, it's more difficult to take very many trades. You got to check. You can only stay in the trades a little bit, a short period of time. If the market is trending, then you can stay in the trades longer, take a little bit longer risk. Now, the market direction or the market trend, it comes 2 different ways now. You have, if you're looking at today's market, we had a bearish market today. It gapped up this morning and it was basically bearish the rest of the day with some chopping up and down. But intraday, the market was bearish. On the daily chart, so what we're looking at on the market right now, the market is basically pretty neutral. It's been chopping up and down since last Friday's tariff news, but there is no direction to it. But the overall market is bullish right now from the last few months. So you're trading within a trend of a trend. In other words, you're trading your intraday trend within the whole over market trend. So if you were trading bearish today, which I just took trades for the day. I just took short-term trades for bearish for the day and traded those, and I didn't carry them overnight because I don't have a good feel for what the market's going to do after that. And then the last one here is buy near support and sell near resistance. Now this is really important. This means don't chase stocks. If a stock rips up in the morning, don't be jumping into it. Wait for it to come back to a support level and then bounce off of there and confirm that it's going back into the original trend. This is important because when you get into a trade, you have to have an exit plan. If you're way away from the support level, your exit's going to cost you a lot of money. That stock can drop down a long way before you take it off, which means you lose a lot of money on it. If you get in right near a support level, which on a 5-minute trade would be like the VWAP or the 80 EMA or the 15 EMA, some sort of support resistance level. If you get in right there and that becomes your stop, then your losses are going to be minimal because you're going to get out as soon as it breaks there. So again, buy near support for your long and sell near resistance if you're going to go short. Okay, so these are the edges. This is what we have that gives us an edge over the rest of the retail traders. In the Compass system, which is now called the SPY super system, this identifies the highest probability trade setups, while sidestepping setups that look good but will fail more often they succeed. Trade the best, skip the rest. It does this by identifying when the institutions are driving the move and when they're not. And it analyzes some fairly complex trading data and displays the results in an easily identifiable visual format that makes it really easy for traders to see whether institutions are driving a trade or not. And I'm going to show you a lot of examples of this, but it's just done through color on indicators on the chart. And I'll show you that as we move along here. So again, we're getting an edge over retail traders. How do we do this? We take trades that are being driven by the institutions. We trade stocks that have relative strength or relative weakness, and we trade in the direction of the overall market trend, right? We obviously get in near support or resistance. That gives us a huge edge over other retail traders because our trades are going to be supported by institutional buying and selling. When we take the trade, the institutions are in there, so we're trading with them. They'll be outperforming the SPY. This is what relative strength means, or relative weakness, and they're going to be moving in the direction of the overall market if there is a direction. Okay, those are our edges. So let's move along here and just cover the SPY super system software. Quickly, I want to just kind of recap why this is important, right? The SPY super system software, this is the critical element in finding and trading the highest probability trades. Right? This is really important. The SPY super system software is the engine that drives our exceptional results. I'm going to show you results that we've had over the last few years and in the last few months and what kind of win rates we had. Again, they're typically 85 to 90%. But the reason, when you see those results, remember that the reason those results are so exceptional is because we have the ability to identify when institutions are in the trade by using the SPY super system. This makes a big difference. This made it, when I found the SPY super system and I bought it just before I had a room or anything, it increased my win rate on my trades. And I've been trading for quite a few years. I had a good solid 80% win rate. It moved it up to 88%. 88% is a big difference as far as your win rates are concerned and also your profitability. So again, this software is the engine that drives our exceptional results. The ability to identify when institutional players are driving a bullish or bearish move and when they're absent. This is the key factor in pinpointing high probability trade setups. And it's the function of the SPY super system software, and it's the critical component. Okay, so that's the SPY super system software we're going to be looking at. And a few other things. I do have a YouTube channel. Rightline has a YouTube channel that I go on every day at 11:30 for an hour. If you want to join that, just go to Rightline Trading and join me on there at 11:30. That'll take you into my room where I'm broadcasting all day. You can ask questions. I'll answer your questions. I have quite a few people in there that have come there briefly and then came right over to the room. So I appreciate that. Okay, and I'm going to run over this real quickly. I don't know what the skill level of all the people and how much experience you folks have trading. But in the 16 years that I've been trading, these are the most common mistakes that retail traders make. based on all the mistakes that I made when I was learning how to trade. Not considering the current market conditions is the most important thing. It's really important. The market drives about 70 or 80% of the stocks. So not considering what the market conditions are is really important. If you're trading like you have a nice trending day in the market and you're taking big positions and looking for big moves, but you're in a choppy day, you're going to get killed. You're going to get chopped to bits. So consider what the market conditions are and use that. Over trading, we've talked about this. A big, huge red flag for most retail traders. They feel like they have to have trades on all the time. I've got to be trading. This is a big one, right? I mean, I went through today, I took 3 trades, intraday trades, that's it for the whole day. A lot of people I know took 20 trades today and they lost money. You know, I took 3 trades and I made money, and that's all I needed to. Again, our objective is not to make trades. Our objective is to make money. Trading your P&L instead of your technical setups. Now, as a retail trader, we need to be able to trade technicals. Technicals being the trade setups, the methodologies, the strategies. But a lot of traders will watch their P&L all the time, and they're getting in and out of trades based on what the P&L is telling them. This is a huge mistake, because when you get into a trade, it should be based on a technical setup. And when you get out of a trade, it should be based on that technical setup broke down. Not how much money did I make and how much money do I lose. I've seen a lot of folks trade, and they'll take a trade, for an example, and they'll be up $300 after half an hour. They're feeling pretty good. And half an hour later, all of a sudden now they're down $100. So they were up 300, now they're down 100. The trade setup's still the same. Everything's fine. The technicals are fine. Now they're down 100. Now all of a sudden they're watching their P&L, and now they're saying, rats, I was up $300, I gave it up. Now the next thing, it shoots up. Next thing they know, they're up $200 a half an hour later. All right, so now they're feeling relief. It drops back down. They're only up 100. What do you think they do? They cut the trade. They take $100 profit and say, wow, I was lucky to get out of that. Meanwhile, the technical setup is beautiful. And if they come back and look at the trade 2 hours later, they just gave up about $400 or $500 in profit because they were trading off of their P&L. Right, very important. Trading what you think instead of what the price says. I'm going to go into this in a bit of detail, but trading what you think is coming from reading social media, listening to the news, listening to your friends, all that kind of stuff. Trading what you think. You trade what the market is telling you, not what you think it should do. Biggest problem that a lot of traders had this last year, since April, when the market turned bearish on those tariff news, they had this mentality that the market was going to go down. We should have a correction. The market should be going to go down. I'm going to get short. And they missed 6 months worth of bullish market because in their mind, they thought the market should be going down. So in other words, don't be trading what you think the market should do. Trade what the market is doing, right? It's a killer, because not only did they lose money on the bearish trades they took, but they missed all these beautiful bullish trades. So don't trade what you think. It's a big mistake. Over leverage, this is pretty obvious. Taking too big a risk. You can't stay in a trade very long if you take too big a risk on it. Not using the daily chart for swing trades. Should always be looking at the daily chart first for any trade you're going to swing. And when I say swing, I mean even just for the day. If you're going to be in it for 4 or 5 hours, you want to be using the daily chart. So if it's bullish, you can go long. If it's bearish, you can go short. If you don't, you're not going to have any staying power in the trade. If you take a trade for a short and the daily chart's bullish, then if it moves against you, you can't stay in it. You can't hold it overnight. You got to take a loss on it. So use your daily chart for swing trades. Lack of patience. Again, we talked about this, critical. Most traders just can't sit there and not trade. Forcing trades. Again, this is related to lack of patience. You know, this trade looks okay to me. I think I'll take it. It isn't set up for me, but it's close. What you'll hear when they do that, by the way, when somebody forces a trade and you say, why did you trade that? Well, it's a small position. Listen, when you take a trade that's not set up properly, admit what it is, okay? You're taking a gamble. You're not trying to be a disciplined trader. You're taking a gamble. Admit it to yourself, because that's what it is. Attempting to pick tops and bottoms. This is a beauty. People think, you know, Tesla can't go any lower. I got to get long. You wait for confirmations of bounces and reversals. Wait for reversals to go off the top and off the bottom. Remember, most stocks that put in new all-time highs continue to put in new all-time highs. They don't reverse from there generally. So don't think just because the stock's up too high, you should be shorting it. Not waiting for confirmation to enter a trade. In other words, stock comes down, bounces off a support level, make sure that that bounce is confirmed. You need to wait, either use a Heiken-Ashi candle that we'll talk about, or wait for 2 candles to confirm that that confirmation is intact. And fear of missing out, FOMO. This is important. FOMO is what happens when the markets get strong. Like this afternoon, there was some bearish runs down. People thought they were, they're looking at the chart. I'm losing a fortune. I should be in these trades short, and they finally crack and they buy the stock right near the bottom. And what do you think happens? They get trapped in the thing. Again, fear of missing out. Now, I'm going to talk a little bit about this trading what you think and what the price says instead of what the price says. And this is the reason I'm saying this is I really like this quote from Stephen Hawking. And the greatest enemy of knowledge is not ignorance. It is the illusion of knowledge. And why this is important, when you hear something that you think the market should be bearish, and this applies to people that were bearish for the last 6 or 7 months, when you think that the market should be going down, you're trading what you think the market should be doing. You're not trading what it is doing. You're trading with an illusion of knowledge. You think you know something that isn't true. You're taking what you think the market should do and treating it as if it's a fact, and it's not. So the greatest enemy of knowledge is not ignorance. Somebody who doesn't know what the market's going to do is a lot better off than somebody who thinks they know what it's going to do and they're wrong. Right? So that I like that. The greatest enemy of knowledge is not ignorance. It's the illusion of knowledge. Okay. This, by the way, I'm going to just show you the SPY super system setup here right now. This one I have runs on Thinkorswim, or it runs on NinjaTrader. I use it on Thinkorswim. This is, if you buy the software, it gets installed on you, right on your software right on your system by Rightline. You don't need to obviously trade on Thinkorswim. You can trade any way you want. I do not trade on Thinkorswim. I trade on Tradier because the commissions are so low. But it gets installed on Thinkorswim. So this is what it looks like. We have a bunch of scanners. This is a relative strength scanner, relative weakness scanner, potential trades for swings. I have several different scanners in here that come with the software. But the information on the chart itself, this is the critical thing. And I'll cover these. This is current time frame momentum. And on a 5-minute chart, this is the current time frame momentum. This tells me whether institutions are coming into the trade right now on a 5-minute basis. All right, and I've got multiple colors here. I've got red and yellow, those are bearish, and green and blue, those are bullish. So this is current time frame momentum. So on a 5-minute chart, this would be the current time frame, 5 minutes. Then I have multi-time frame momentum, right? This is telling you what's happening over multiple time frames at the same time. So this is, you can see that the multi-time frame on this particular setup was green, but the current time frame was switching back and forth. So there was a longer term strength here, and the institutions are in it longer term, but they were coming in and out of it on a 5-minute basis. All right, and this is on the spot. And then we have long-term trend. Again, green and your red on the long-term trend. So these are the important lines. If you're trading on a 5-minute basis, if you're just trading intraday trades quickly, like on the SPY, the Qs, the IWM futures, this is what you use. You just need this line right here, this current time frame momentum. And you just trade it. If the color changes from yellow, which is bearish, to blue, which is bullish, and you've got a price that's moving above the VWAP, which is this pink line, then that's an entry for a SPY trade right there. That's a long SPY trade right there. Very easy to see. Now up here in this portion of the chart, we've got a few things. We've got this white line, which is called the pivot point. We only have one pivot point in the software. The software creates this pivot point. It's a good support and resistance level to determine when you should be getting out of a trade. If the price approaches the pivot point from above, then you typically need to be getting, if it's coming, the pivot point's up here and it's coming up, you need to be getting out when the price gets near there because it's a resistance level. Now, this is the VWAP here. This is the volume weighted average price. All the institutions, every institution uses this on a 5-minute basis for buying and selling. This is where they get in and out of trades. When we're trading, we use this as our main support resistance level to enter a trade. We enter long if it's going through it, the price is going through it, and we've got bullishness down here, the institutions are buying, right? The next one we use is the 15 EMA, the one above the VWAP. The 15 EMA becomes another level for us to enter the trade if it's far away from the VWAP. In this case, it was right on. But so this is what you're looking at, right? The VWAP, the 15 EMA, those are your support resistance levels. A pivot point here, right? which isn't always going to be there. It's only there when it occurs, when it's created. And then we have this thing called VOLD, up, down. This is the market internals. This tells you what's going on in the whole entire New York Stock Exchange right now. It takes all the volume that's being on stocks that are moving up, subtracts all the volume on stocks that are going down, and either comes up with a bullish or bearish basis. And this tells us what the markets are. So if the market internals are bullish and we want to take a bullish trade, it gives us more conviction that this trade is likely to work. And so this is the whole SPY super system right here. This is the actual oscillator that's being used. But this oscillator is the gear. But we strip out the divergence. It only has momentum in it. This is truly a completely strict momentum indicator, and I can see exactly how steep it is, how fast it's coming down, how fast it's going up. So this is the SPY super system. We're going to look at a bunch of these charts, but we have the market internals now. This is a fairly new addition, and then we get the VWAP, the 15 EMA, your pivot point here, and your indicators here that are important. That's all you need. Okay, and this is, by the way, I call that over here the market internals. It's really kind of the current market momentum is what it is. And again, it's going to be, if it's yellow and trending down, that means it's slightly bearish. If it says down like it did here, up here, green would be bullish. So the colors will be the same. They'll change colors as the day goes on and as the trend switches. Okay, so here it is. There it is right there. Now we also have, if you buy the SPY super system, if you like to do intraday trades, and I do a lot of them, if you like to do just 5-minute trades during the day, you can also get this template. You get them both, this one and this one. You can swap them back and forth. This just tells you what you need to do for intraday quick types, scalping type trades. I don't really call them scalping, but they're quick trades. And you can see here, here's a trade on the SPY here, where we went green, we went to yellow, went back to green, boom, you buy it right here as you get a pop symbol. This, I didn't mention, by the way, these pink arrows and blue arrows are what's called pop out of the box symbols. These indicate a compression break. Compression break to the upside, compression break to the downside. Helps a lot with finding an entry onto a trade, right? So both of those templates you can get with the software. You can use whichever one you want, and you can flip back and forth on them. Again, the color codes for the SPY super system. Green is very strong bullish. Blue is a bullish trend. It'll go blue before it goes green. Red is a very strong bearish, and yellow is a bearish trend. It'll go yellow before it goes red. So that just kind of gives you an idea of what the colors mean. Here they are right here. So you can see strong bullish, switching from bearish to bullish right there, and then strong bullish. Okay, so I'm going to show you a couple of charts of some trades we've taken recently. This is a daily chart. Now, in a daily chart, it's very important that the current time frame momentum here and the multi-time frame momentum here are aligned. Green or blue for long, red or yellow for short. This was a trade in NVIDIA, right, that we took. Obviously, the institutions are buying the heck out of this. You can see it across the board. What we did was we didn't chase it up here. We waited for it on a daily chart. This is a daily chart. We waited for it to come back and bounce off of this 15 EMA, and we took the trade right here, and we wrote it up to here, and we get out that morning, and that was a 32% gain on that trade on NVIDIA using the daily chart, showing us that the institutions were in that trade. Okay? This was SMR. This was another long we took. We get in, this was quite a while ago, 56% profit. We get in on 513 out of 515. You can see the indicators here now. This is a daily chart. So the current indicator here, current momentum indicator, you notice it was yellow. That was a bearish trend. Then it went to green, went right to bullish. This was a bullish trend. All of a sudden we're back bullish. So we buy it. We see the institutions are in. They're already in on the multi-time frame. We take this trade right here and we write it up. And we get in and out of that for $1,170 profit for every 2,000 invested. And when I show you the results we have, it's going to be based on the $2,000 per trade. That doesn't mean you have to take that, but that's how I come up with the baseline for profitability. All right. Which platforms is it available for, Eric? It's only available on Thinkorswim, in Ninja8, right? Either one of those, Toss and Ninja8. All right, so here's a trade in Tesla. Just can see now, this is a 5-minute chart. So this was like an intraday trade for us. And here it is first thing in the morning, right? And you see we get a pop and we get it popping above the VWAP. Typically, I'll wait for a couple of candles to see where it goes, but This was a good intraday trade right here. See how we went from red the day before to bull here, to blue here? Bullish trend, stock pops up, goes above the VWAP, you grab it right here. As long as it stays above the VWAP should stop. Remember, enter near support, exit near resistance. We're entering this, we're near the resistance level right here. We get through it. That now becomes our support level. We ride it up for 5 or 6 candles and we get out right up here. That's a beautiful trade on Tesla for a quick trade on the options. And again, notice it stayed green the whole way. It was still green, but notice it switched over to yellow here. And what we do is we take profits when we start to get some momentum starting to decrease. All right, that was Tesla. And here's another SPY trade here. Again, you can see the long trade here. We see we're bearish here. We're bullish in the morning. It's just moving sideways along the VWAP, the volume weighted average price. Goes blue right here, right? Pops up above the volume weighted average price, VWAP right there, and that's where you take the trade. It's really pretty simple. You've got, if it fails on you, it's going to break down below the VWAP. You take it off. You have a fairly small loss. You stay in it. It keeps riding up. You switch to the 15 for your support level and ride it up. And as soon as you start to lose momentum, you get out of the trade. You could have stayed in it because it stayed green here, you notice, but I decided to take it off here. But again, it just kind of went sideways after that, and it's finally switched to yellow. Okay, so that's a SPY trade there. Right, and here's a Wendy's trade. This was an overnight trade, daily chart. Here's earnings. Notice it went from blue buying to red selling. We take it right here as it breaks below the 15. We were just in this overnight, in and out. And this is just a picture of somebody who is doesn't use the SPY super system, who doesn't know any institutions in the trade. Perhaps he's suffering from FOMO. He grabbed the trade after it was up too much in the morning. It turned around and went against him. This is what people feel like. This is trading with emotion. And it's really important that you try to trade with as little emotion as possible. Now, I know it's hard because you got money at risk, so I know it's hard. But it's very important to try to trade with as little emotion as possible by sticking to your disciplines, following your rules, looking at your technicals. Don't look at your P&L. P&L will automatically institute emotion in you. But there's a guy who's trading emotionally. That's most retail traders, unfortunately. And these are folks that, like ourselves, who have a nice track record. We know that we have a win rate of about 85%. We know when we take a trade 85 times out of 100, it's going to be a winner for us. And we feel very confident in our trading. Makes a big difference. Okay. What are the red and green dots on the candles? Are these Heiken-Ashi candles? Let me look and see which ones you meant. So these right here are called these are called acceleration dots. These tell you when they're green like this, that tells you that you've got basically the momentum is very high. It's staying very high. I don't use them, to be honest with you. I don't use them, but they do tell you that you got good momentum, but I don't need it because I can see it right down here. Okay. Okay, so yeah, that's a red and green dots. Again, as acceleration dots, I don't really need them. Now, process precedes results. I just wanted to cover this quickly. And I do this for a couple of reasons. One, I find so many traders look at their P&L to make a determination if they had a good trade or not. All right? When you take a trade and you make money on it, that doesn't mean it's a good trade. There's a lot of bad trades that make money and a lot of good trades that lose money. The point is you want to be able to take all good trades. You don't want to be taking bad trades. And if you take a bad trade that makes money, you're basically cementing in your mind that that's a good setup when it doesn't work. It doesn't work long term. So learn the process before you focus on how much money you're making or losing. How much money you're making or losing is not really important in the beginning. I mean, you want to make money, of course, but it's important to learn the probabilities, setups, and strategies, and learn those. Once you've learned those and internalized those, you'll have confidence in your trades, right? Focusing on the results without having a solid process to follow is going to end in failure. I've seen it over and over again. All right, so this is the basic high probability trade setup funnel that I use. So the first thing I do when I look at a stock that comes up on a scan is I look at the daily chart to see if it's bullish or bearish. Okay, if I'm going to swing trade it. If it's bullish, then I can take a long on it. If it's bearish, I can take a short on it. If it's bullish, I cannot take a short on it. Right, so I look at the daily chart and then I align with the 5-minute chart to try to find my best entry. Right. Now I want to trade with the trend if there is a stock. In other words, determine the market right now. What's the market doing right now today on the 5-minute chart, and what's it doing on the daily chart overall? Do we have a trend either way? Do we just have a lot of chop? That's important. Then the SPY super system comes into play. Once you've found a stock and maybe the market's trending, it looks good, the daily chart's bullish, you want to go long. Does the SPY super system have that as a bullish trade for you? Does it have green or blue on the multi-time frame and current time frame momentum? That's important. If it does not, the trade is, I don't take it. There's no trade I'm going to take that's going to have that isn't aligned on the SPY super system. I only want to be in with the institutions, right? Then you look for relative strength and relative weakness as the criteria are met, and then engineer support, sell near resistance. Perhaps if it's away from support or resistance, put an alert in. You know, I did that today on the stock on SPY. I wanted to go short. It bounced up. I waited for it to get up to the VWAP, turn around and head back down again, jump back in again when it was right at the VWAP, and made some good money on it. Right, so that's the high probability trade setup funnel right there. This is the process that we follow. Inside of the room and on the alert service, these are the strategies that we use. Right, I have straight calls and puts. This is fairly common. Most everybody knows about that. I also do straddles and strangles, quite a lot of straddles and strangles. These are non-directional trades. If you've got a market that's choppy as heck, but you've got a stock that's got a lot of volatility and it's making big moves up and down, but you don't know which way it's going to go, then straddles and strangles are a very good way to trade that because it's non-directional, and as long as it makes a big move, you make money on it. You don't care which direction it goes in. I use debit spreads, usually weekly options expiration. I do this quite often. Those have good ROIs if you get the direction correct. Again, and it reduces the cost of what the trade costs you. These are less expensive than taking straight calls. I do time spreads over earnings. It's called a calendar spread. This is to capture volatility crush. This is a non-directional trade as well. I did one of these on Schlumberger today. Had a hard time getting filled on some of them, but we did get filled on a bunch of them at 24 cents this morning. And then I actually took it off today for 30 cents at the end. $25 in, $30 out, 25% profit before earnings even came out. But typically what we do is wait overnight on these things until the earnings are released, either after the hours or before the market opens, and then we take the profit as the volatility crushes down. Right? If you don't know what volatility crush is, when a stock is going to have earnings, when the earnings are coming out, they add a bunch of premium to the puts and calls because they don't know which way the stock's going to go and how far it's going to go. And we take advantage of that because once the earnings come out, that volatility crush comes out and we take profits on it. Weekly ATM strategy, this is one where we take a neutral to bullish stock and we sell puts every week to bring in premium for ourselves and have a longer dated put further up in time to protect the trade in case the stock goes against us. And we do credit spreads. And I'm going to talk quickly about the SPY super system. You notice I was talking about taking quick 5-minute trades off a 5-minute chart. That's what the SPY super system is. And the SPY super system methodology, we use the SPY super system software to do the SPY super system methodology. You can do this on the SPY, the Q, the IWM. Mostly I do them on indexes, but you can also do them on futures. You can do them on commodities. You can do it off of any individual stock. You're following exactly the same structure, and they work very, very well. They're quick trades. You only have one trade on at a time, but you've got to watch them. I can't post these. I can't alert on these. They're too quick. I can tell you when I see them setting up, but I have a video on this whole thing, how to find these particular trades. And these have if you don't know what a profit factor is, profit factor of 1 is breaking even. A profit factor of 2 is very profitable. Most of the trades we take in the room have a profit factor of about 2.6, 2.7. The SPY super system trades, these quick 5-minute trades, have a profit factor right now of about 3.9, which is extremely high. All right. The alert service, by the way, it's designed for day trades and short-term swing trades. Obviously, not doing an investment service. Designed for traders who can't watch the market all day. Real-time alerts will come out of the highest probability trade setups. And what's that mean? Are the institutions in the trade? Yes. Okay, that's a high probability trade setup. Is the market direction in our favor right now? Is the market trending bullish? Yes. Those are the trades you're going to get. And then we do technical analysis to find the best ones with the best entries on them. Okay. All right. Now this is my equity curve. I don't like to brag about this. I don't talk about myself very much. You know, I'm much more interested in folks in the room learning how to trade good, trade well, and make consistent profits. But this is this year so far for the $2,000 invested in each trade in the room. All right. Now we're going to talk about Heiken-Ashi candles here. I think, you know, people want to know about Heiken-Ashi. Does anybody in here trade using Heiken-Ashi very much, or do they know what Heiken-Ashi is? Give me a yes if you do trade using Heiken-Ashi. I'd be interested to see if we have a few people that do that now. Eric, yes, you do. Okay, excellent. All right, excellent. So some people do. All right, I'm going to show you. Mark, yes. All right. Trading Heiken-Ashi can make quite a big difference in your trading. Two things: it's going to give you the ability to stay in trade longer. It's going to get you into good trades with more conviction, and it's also going to add confidence in the trade. You're not going to get shaken out as quickly on Heiken-Ashi candles. All right, so here we go with Heiken-Ashi candles. These are Heiken-Ashi candles. This is British pound, Japanese yen. Doesn't matter. This could be Tesla. This could be gold. This could be SPY. Doesn't matter. But the key thing with Heiken-Ashi candles are the candles that have flat tops. See these flat tops? These are bearish Heiken-Ashi candles. This is what you want to remember. Bearish Heiken-Ashi candles have flat tops. Bullish Heiken-Ashi candles have flat bottoms. That's the main distinction here. So every time you're getting a flat top, you've got a nice Heiken-Ashi bearish trend taking place, right? There could be a bunch of noise in here in the 5-minute chart, but on the Heiken-Ashi candle chart, which is 5 minutes, it's going to look like that. Now notice something, just for information purposes. The beginning of each candle begins at the halfway point of the previous candle. They always start halfway up the previous candle, or halfway down the previous candle. They always start like that, halfway, always, because of the way they're calculated. So this is a Heiken-Ashi bearish trend right here, right? Big red candles with flat tops coming down, coming down. Now let's say we were in a stock that we were actually bullish on this stock. We were waiting for it to pull down to a support level so that we could get in and take a trade. So we watch it come down. It's bearish, 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 bearish. And then it starts to turn bullish here. Notice we're getting wicks and tails, wicks and tails, wicks and tails, and then a flat bottom. That's a Heiken-Ashi bullish reversal right there, that candle. Whoops. But caveat here, when you get your Heiken-Ashi reversal to get back into the original upward trend, you want the candle that creates that reversal to be as big as the previous candles coming down. See how big these are? How high they are? That's, to me, is not an adequate candle to go long. You would have made some money on it if you took it here, you hit it here, then it starts to get a bit choppy, and then it flattens out again. But this is not where I would have taken it. Some people would take it there. It's a Heiken-Ashi reversal candle. Then you get a bearish Heiken-Ashi reversal candle. That comes down, flat top, flat top. Here's your Heiken-Ashi candle. This is your Heiken-Ashi reversal candle to start a new trend. This is where you want to take the trade, right? See this Heiken-Ashi candle, see it's got a flat bottom. See how big it is? You don't even have to wait for this to close at 5 minutes. You're going to have a big candle. You're going to have a flat bottom. You're in the trade. And remember, with Heiken-Ashi candles, after about 3 minutes of a 5-minute candlestick, if you've got a flat bottom, it's 99% of the time it's going to stay flat. So that's not going to reverse on you. So this is where you would take the Heiken-Ashi reversal candle entry, right there. And you see what you get? You get flat bottom, flat bottom, flat bottom, all the way up right here. Beautiful trend, a really nice trend to get in. And then you start getting wicks and tails, and then you get a red candle with wicks and tails. You take your profits. That is your Heiken-Ashi bullish trend right there. And that's what it looks like on the chart when you find them. Sharing my screen. You can't see it move. I haven't moved anything yet. Can you see the Heiken-Ashi candles on here? You should be able to. Can everybody see my screen okay? Yep. Okay, good. Yes. Yeah. So these are Heiken-Ashi candles. This is what they look like. We're going to look at a few of these. But this is it's nice on stuff like this graphic because you can kind of show it, right? They call it no upper shadow. I call these wicks and I call these tails. Okay, no lower shadow. But that's a bearish trend. That's a bullish trend. This is how you find a Heiken-Ashi reversal on a bullish trend to go long. All right. Now, again, here's the distinctions. These are the things to remember. This is really important. Bullish Heiken-Ashi candles have flat bottoms. Bearish Heiken-Ashi candles have flat tops, right? Bullish Heiken-Ashi reversals are identified by flat top Heiken-Ashi candles followed by flat bottom candles. Now they don't have to come one right after the other. There can be a couple of doji candles mixed in there. You can have candles that are not flat bottoms or flat top, but that's what you're looking for. You're looking for that reversal. Bearish Heiken-Ashi reversals are identified by flat bottom candles, which are bullish, followed by flat top candles, which are bearish. This is how you find Heiken-Ashi reversals. And believe me, when you're trading, this can really help you a lot. Okay. Okay. So again, understanding, we're going to looking at this trend again. Understanding the flat bottom candle in an uptrend signals a strong visual of the current trend and strength. So here's the thing we just looked at. Is the flat top candles here, the bearish Heiken-Ashi candles that are red, chopping around. Now let's say this was the VWAP. This blue line here was the VWAP, and you wanted to get long when the stock broke above the VWAP because it's bullish today. You want to take it long. You see how it breaks above this blue line right here. You see the Heiken-Ashi reversal candles here and here. There's your entry right there. On that flat bottom, we had flat tops, and then we get a flat bottom here. After a flat bottom over here that was below the VWAP, you wouldn't take it. You take it here, and you follow this up. You get a little red candle in here, but it hasn't broken below your support level, and then you ride this thing all the way up, and you start to get out. You could either get out here, or you definitely would get out right here as we reverse from bullish to a bearish flat top right there. That's definitely a reversal, and this would be your profit in that trade. Okay, that's what you look for. So again, there's a distinction. I'm not going to go over that again. So the recap, the advantage of Heiken-Ashi candles, they smooth out the price action, reducing noise, right? And they make identifying trends much easier. It improves identifying confirmation of trends and trend reversals. This is a key thing, confirmation of a reversal, and help identify potential X's when the candle bodies shrink or the reversal occurs. So that's how we trade it. I'm going to show you a couple of graphics, then I'm going to look at some live charts with Heiken-Ashi candles. All right, so this is a trade way back in 2023, but this is a regular candlestick formation on Uber. All right, now notice right here, look at May 1st. See the gap up here and then another gap up here? This is May 1st. This is pretty bullish as it comes off. This, by the way, is my TC2000 setup. I use TC2000 for my charting, and I use Thinkorswim for my super systems. But this came off here, the 200-day moving average, but a gap, gap, gap. So a lot of people would be afraid to take this on this gap. But let's look at that same candlestick formation as Heiken-Ashi. Right. So here's May 1st. Right. Here's May 1st. Right here. Here's May 1st. See what you've got. See the Heiken-Ashi bearish candles, the flat tops, and then you see how you go to a flat bottom right here. That is your entry for the Heiken-Ashi reversal candle for Uber. Right. That would be the entry you would get in. Now notice something. Gaps. No gaps. No gaps in Heiken-Ashi candles. Right. So you would have been in here. You would have cut that whole gap. Off that. So that's what the difference, and you can see how nice this was. See, it starts to flatten out, and you get a little flat here, and it comes back down to the 8. That's the 8 exponential moving average. On TC2000, I color my candles green candles blue if they're breaking out of compression. So that's why that's blue, and they're pink if they're breaking out of compression to the downside. But that's just in case you had a question on that. All right. So now what I'm going to do is I'm going to look at some here. Now I'm going to bring over the SPY Super System. If I can find it. Yeah, there it is. All right, so here's the SPY Super System, and I got a couple of charts, but I'm going to take a look at some charts here on a couple of charts. So we're going to switch to a daily chart here for Heiken-Ashi candlesticks. All right. All right, so there's the SPY today, by the way, big mess. That's the daily chart. Remember, see what I said, what the SPY was, it doesn't really have a trend right now. It was very, very bullish here. People were shorting the market, but it's been going up and up and up. Well, here we had this big news on tariff on Friday, right? 100% tariffs on China. Then, oh, maybe not. Oh, yes. And so this is the kind of price action we're getting. This is completely non-directional. So the overall market right now is not great as far as direction is concerned. It's not bearish, it's not bullish. But let's take a look at a stock here, like let's take a look at Monster. Let's see what Monster looks like. So now here's Monster. Right here's now see this, by the way, let me switch to Heiken-Ashi candles. You just changed the candle style over here from Take a Swim from candle to Heiken-Ashi candles. Yeah, so this is a Heiken-Ashi reversal candle right here. All right, so this looks like a pretty good setup. All right, we had a Heiken-Ashi reversal here. But here's the thing, if you get a Heiken-Ashi candle, looks like a good setup. See what your current time frame momentum is though? It's yellow. Now you're just down just a little bit, but it's yellow. So I don't take that trade until this turns blue, which is likely to tomorrow. But that's one of the Heiken-Ashis that I found on here. Another one is Agilent. Right here's Agilent. So here's your move down here. You see a nice big move up. See the Heiken-Ashi reversal candle here. See how that followed through? Here's the Heiken-Ashi reversal candle here after compression. Beautiful compression on Agilent. Right? This is a nice trade. And you notice that current time frame momentum on the daily is now bullish. Multi-time frame is bullish. This is a trade for tomorrow if it opens green. Agilent is a beautiful setup of Heiken-Ashi candles. Let me see if I can find a few more here. It's hard, by the way, to find anything good today on the bullish side because the market was so weak this afternoon. But let me see if I can find something here. Yeah, how about IMNN? IMNN. Okay, IMNN. Okay, Heiken-Ashi reversal candle. Right here, this had a tiny little tail on. Here's your Heiken-Ashi reversal. Green, 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 green. Beautiful setup. Beautiful setup to go long on this one if it's green tomorrow. And again, very nice, very nice. This is actually not considered a reversal. This is considered a confirmation or continuation because it actually reversed back here and then compressed, and that's a continuation candle of the Heiken-Ashi uptrend. All right, and I'll look for a couple of shorts. There should be plenty of those today. I'll take a look one here. Let's see, what's that? IONQ, which has been a darling here lately of for tech stocks. Okay, so here's IONQ right here. Okay, so you can see what we've got here. You can see the Heiken-Ashi reversal candle. This thing's been fairly bullish, and then we reversed right here. But notice it stayed green. Can't take it short. Moves up, compresses again. Now we get a Heiken-Ashi reversal. See the flat pop right here? And you see what you've got here? Yellow, yellow. Heiken-Ashi reversal and current time frame momentum, multi-time frame momentum on the daily gone bearish. That's IONQ becomes a short setup right there. Okay, it's a decent short setup to trade. Let's see what else we got. I'll look at EPD. This looks like a continuation to me. Yeah, so this is a Heiken-Ashi continuation to the downside. Here's where your Heiken-Ashi reversal occurred right there, which would have been a nice short. The reason this is now considered a Heiken-Ashi reversal is because we had a little wick on it yesterday, but today it's flat again. This is a nice continuation of EPD to the downside. Here's a trade. This is a stock that I traded today, VRSK short. I just intraday traded this because the market is unsure. This is where I took this. Notice here, flat, see it compressing. See what we got today? Heiken-Ashi reversal candle. Nice big long Heiken-Ashi reversal candle to the downside. So this is a trade I took short today, VRSK, and I was out of it before the day was over. I made some good money on this thing. This was a nice one. If I switch over to the 5-minute chart on this, you're going to see the great move down on this thing today. Where do you take it? See how it went from blue from buying to selling right there? As it breaks below the 15 EMA right there, that's where you take the trade. Right there, and just write it down. And you're out of it before the end of the day. All right, so that's what the Heiken-Ashi candles look like on the trading platform. And again, you can use them on 5 minutes. You can use them for intraday trades. You can also use them on daily to find swing type trades. I do that all the time. Okay. Okay, so those are some bullish and bearish Heiken-Ashi setups. in real time. This is live trading, and how you find these and how you use these for yourself. Okay, so we looked at some of the live those. Okay, so right now I'm going to go into, and I don't want to take up all day, but I'm going to take a look at the results that we've had by using the Heiken-Ashi reversals and the SPY super system methodology, looking for institutions being in the trade, right? And then we're going to look at some individual charts so we can see exactly how we trade them, right? So here's the SPY super system option trades right here. In fact, before I do that, let me just quick go back to the SPY super system. I want you to look at what the SPY trade was like today. There was some really good shorts on the SPY today, right? So this is a 5-minute chart, and here's the SPY right here. You see how it went from green here to yellow right there, right on the, see how it's just broke below the 15. This is where I took a SPY trade right here on this trade today as it broke down. Heiken-Ashi, Heiken-Ashi, not Heiken-Ashi, but these are Heiken-Ashi candles, but this was a pop out of the box to the downside, and I took it right there, right as it broke below the 15, and I wrote it right down, and then I get out as soon as it flattened out right here. This is a nice trade on the SPY. That's probably about $130 a contract on that trade right there. So that's how you use it. I go back and look at it. You can see there was some more opportunities right here as it broke below the VWAP and the 15, and it got through the pivot point. Another short for 3 or 4 candles. These can be pretty quick trades, right? So just so you see how those work. Okay, we go back to the presentation. We're going to talk about some results. All right, so looking back, I've got just the last 3 years here, but I've been doing this since 2022. 2023 trade results. Investing 2,000 in each trade we took in the room. It was the Compass, called the Compass at that time. It's now called the SPY Super System trade. Putting 2,000 in each trade in the room produced a little over 60,000 or a little over 5,000 a month by putting 2,000 in each trade. In 2024, same thing, 2,000 each trade produced 54.9, almost 55,000, but 4,500. And a lot of the profitability, by the way, in these trades is dictated more by the market. In other words, trending markets are going to typically generate more profit than choppy markets because you can't stay in the trades as long. All right. September, this was through this year, 2025 through September, investing 2,000 in each trade, produced 4770, 765, above 48,000, a little over 5,300 per month so far. Pretty nice. I mean, these are pretty nice numbers. If you're using 2,000 trade, obviously you use 1,000, you'd be about half of that. Okay, now to kind of go over the results, I do want to point out what happened back in April when the tariffs went on and then the tariffs went off. Because back in April when they put the tariffs on and then the tariffs went off, a lot of retail traders that I know basically got wiped out. Their accounts got wiped out. The tariffs went on, they went short, they got trapped, they got margin calls. Then they took the tariffs off, they went long. The market pounced up for a brief and then it turned around, went right back down again. They get trapped again. They're out of business. They basically get wiped out. They got way too aggressive. They just didn't adhere to any kind of discipline. We only had, at that point in time, the SPY was down over 10%, actually in 2 days. We only had 4 trades on in the room and in the alert service. We had the Broadcom, AVGO. We get in for $75, and out for 104, made 754. And again, these were all short. We were short everything. This was a big one, Nike. We were short Nike. We get in at 285. We get in at 285 and we get out at $9 per contract. That was a huge 216% profit. This is not common. Please don't mistake that this is a normal trade. This is not. But this is when the tariffs went on. Remember, they were going to put a 39% tariff on Vietnam. Nike makes all that product over there, so it crushed them. And we happened to be short because the short setup was there already, and we wrote it down, and that was a huge profit for us. We had Sarepta short, in at 450, out at 8. That's a more normal percentage. And then NNE, we were in for $1.80, out for 225, about 25% profit. This is fairly common on NNE, but these are all short. It's only 4 trades we had on, and they were all on the alert service as well. Okay, so just to recap what's going on here recently is June. I was out on vacation for 2 weeks, so we only had 11 trades. We had 10 wins and 1 loss. a 91% win rate, 3,790 in profits. And here are the trades. Again, we have losers. Keep in mind, we have losers. Everybody has losers. But these are the kind of percentages you can expect. 20, 25, 23, 42. This is the kind of percentages we get. All right. This is July. We had a lot of trades in July. I was probably trying to recover from my vacation. I was putting trades on. But we had a bunch of trades in July. But see the percentages, 40%, 32, 52. Again, I'm not going to bore you with all of these, but I want your expectations to be, this is the kind of profit you're going to expect. 10, 20, 30, 40, 50%. That's normally what we're going to get in most of our trades. We did have the Sarepta Strangler. We had 166% on, 77% on the SPY overnight, but these are the percentages you're going to see. So July, we had 30 wins and 3 losses. This is really hard to do, to keep this kind of win rate, really. To go from 88, 70, 87, or 88% up to 91, it's very, very hard. But 2,000 invested in each trade produced almost 17,000, 16,829. Big month in July. August, 20 wins, 4 losses, 84% win rate. 2,000 produced 5960. And September was actually, I think this is the whole month now. 21 wins and 4 losses, 84% win rate. Produced 4744. We had some losses in there. You can see the losses we took. But those are our trades recently. I'm going to run just through quickly some of the old trades back from 24, just to show you the percentages. But all I really want you to see here is the percentage games, how consistent they are, how few losses we have, and what our profitability is. Very, very profitable on these trades. January, February, very big month. 24 and 2 produced 11,745. That was another big month. This is not common. It's mostly going to be somewhere between 3,500 and 7,000 or so a month, right? So this on 2,000 a trade. So here they are. You can see the percentages. Little trades, let me tell you, little wins really accumulate over time. People think they're looking for these big home runs. They want to make 200%, 300%, 400%. Believe me, taking 25, 30, 35, 40% on a trade after trade after trade really adds up. Is there a scanner in the SPY system so we can find our own trades? Yeah, the SPY super system has about 5 scanners in it, and I'll show you some of them. I'll show you some at the end. I did show them when we had them. We have one for shows relative strength and relative weakness. You can do that on a 5-minute chart, or you can do it on a daily chart. And then we have the what I look for swing trades. Those are on the daily chart. And then I have another one that looks for what's called pop out of the box. So those arrows that show us compression breaks for bullish and bearish stocks all in one scan. So it's quite a few scans. And I'll tell you, we have a lot of people in the room. We have hundreds of more people in the room every day, and a lot of professional traders, and they're throwing out trades all day long that they see for setups. And I just pop them up on the screen, and we can see those. A lot of our trades actually come from trades that other members are finding. Okay. Oneka, I appreciate that. Does anyone else seeing how this makes sense? I'm absolutely getting some great education here. Yeah, well, listen, what I try to do in the room is to educate all day long. We talk about strategies and setups and technical analysis. Somebody tells me a trade that they like. What do I think about this chart? I bring it up. I show it to them on the SPY Super System, and then I show it to them on TC2000, and we'll critique it. Is this a good setup? Is it a good setup or not a good setup? If it's a good setup, is this a good place to take it? What's the options look like? Do the options rates look good? So I try to go through that all day long as far as educating people is concerned. I think if you talk to members, you find out that a lot of members are really happy with the education they get, and they're trading, they're being successful. That's the whole point of this room, is to be consistently profitable. How much money I make isn't really going to help you in the least. I know a lot of these people tell you how that they're standing in front of big houses with Ferraris in front of them and how much money they make. Are you getting any of that? No. And believe me, these people are renting Ferraris, and I've been through a lot of these rooms. Their strategies don't work. This has been tried and true and it's proven, but it works for me perfectly, and it'll work for you if you learn it and use it. I've got videos on all of these strategies we use. Okay, so here was May. Again, 88% win rate. You can see the percentages. Now, I'm just going to jump around here because I don't want to bore you with all this stuff. But okay, the bottom line is we're very profitable. we're getting 85, 86, 89% win rates. These are the alert trades. This is one of my worst months, 75% win rate, still 3,300 on the alert service. And August was pretty nice. This was my losing trade last. I've had one losing trade in 2 years, right? And one losing month in 2 years. This is what it was. September of last year, 62% win rate, 66% win rate. Basically, I had to wear a paper bag over my head so people wouldn't recognize me after this month. I only lost $1,786 in the room and only $295 on the alert service. But it's embarrassing, right? So, but in September, that's the way it was. October, we bounced back, 85% win rate, $7,400 and $6,000 on the alert service. And again, you can see the percentages here. So we do have losers. I mean, it's important to understand that. What's the schedule of the room, Mario? I'm in there from market open. I usually open the room about 9:10, 9:15, and go over the trades that we've got on. I go over the pre-market action. We take a look at what sectors are outperforming. We have a Discord room as well. We have 2 other professional traders, Dr. No and Savvy Trader, that they post stuff in there all day long. They post all my trades. They also post charts, and they do technical analysis. They'll do post charts of setups, and they do information on any kind of economic information that's coming out and sector strength during the day. A lot of good information that you can get in the Discord room. Trade futures too. You can trade anything you want. I typically don't trade futures, but you'd like to be in the Discord. How to get in? You get in the Discord by taking a subscription to the room or the alert service, but specifically the room, or you buy the software. If you buy the software, you get into the Discord room automatically. I don't trade futures generally, but anybody can. I usually trade SPY-Q, IWM, and stocks. The reason I like stocks over futures, generally speaking, is you have relative strength and relative weakness that you can use as a criteria for trading stocks that you can't really do in futures, but you can in stocks. So it gives me an extra edge. But I mean, as opposed to trading the SPY, when I trade the SPY, you can obviously trade the ES, or you can trade the NQ, or the Russell, whatever one you want to trade. When I bring up the software, you can put any symbol in there you want. You can put gold in there, you can put silver in there, you can put oil in there, you can put anything that you want in there. Okay? It's my dog. Hold on just a sec. Sorry about that. My wife just came home and my dog's greeting her. Okay. So yeah, futures, you can trade anything you want. You can put on the SPY Super System software. You can put in, you can put in /ES, /NQ, whatever you want, and trade that way. You'll have to ask Rory about that. Ask Rory. He'll tell you about that. About software for futures and getting into the room. Yeah, I can't answer that for you. Hey, Greg, can alert service come to a cell phone? Yeah, it comes to your cell phones. They're SMS alerts. That's where they're meant to come to. They come directly to your cell phone. All right, that's where the alert service goes. Okay, so there's October and there's November. This was the January through April. Again, good results. This is just to show these are actual results coming off of the trades. It's important to understand that trades that I take in the room and trades that I alert on, and I don't alert on every trade we take in the room because some of them are too fast or they come in too late in the day. But every trade I take and every trade that you see alerted, every trade I post in the room, I take all of those with real money. I'm not doing any sim trading. This is real cash. So because I have people say, with a particular position, do you know we're down this much on this account? And I say, of course I do. I'm in the trade. I always know where we are in the trade. Okay, so these were the results: January, February, March, April. All good results. So you can see that. I mean, I don't have to re-emphasize this. The alert service, by the way, this is what it looks like. The first thing you get, like on this Nike trade, this big Nike trade, it has the date. It's going to come to it. The first alert's going to say NKE by the April 11th, 67 puts for 285. That's what you're going to get. That's what you go. So there's your stock. Here's your expiration date, April 11th, and here's your strike price, 67 puts, and how much you should pay for it. Then you'll get another one that'll show that, and it'll say sell order, tell it for 9, and then you'll get one that says it was sold, right? And there could be other ones along the way if we make adjustments to where the X is going to be, right? And when they come out now, I put a little disclaimer in front of there. You know, here is the updates that you requested. The reason I do that is the alert service is cautious about people giving financial information. So basically, it says that here's the update you requested. Since you signed up for the alert service, you're obviously requesting these things. Okay. All right. So how do we achieve these stunning results? Well, we follow the process. We are able to identify when institutions are driving a trade and when their market internals are heavily bullish or bearish. And we only take trades, generally speaking, when both of these are in their favor. I will take trades if the institutions are in the trade and the market internals are neutral. I won't trade against the market internals. All right, and how do we find it? Well, I think I've talked about this already. Triple screen assessment of momentum trend, and we do look at some money flow. This is the key thing here, momentum. What's momentum, and how we judge that. Right, so here's the again, the SPY super system. We've already talked about this. There's your indicators. Here's the oscillator. Here's the current time frame momentum, multi-time frame momentum, long-term trend, pivot point, exponential 15 exponential moving average, and the volume weighted average price. And here should pop out of the box symbols. There's all of the stuff that we need to trade. And here's the new template. Again, just the current time frame momentum. If you want to do a bunch of trading off the 5-minute chart, not worrying about the day trade for swing trades. But you get both of these. So you can swap them back and forth. All right, this was a SPY super system trade that we took on the Qs. If you can see here, this is where I took the trade. See how it went from buying here to selling right here, right? Blue, a green to yellow. I took it right here as it broke below the 15. Take it right here, and we ride this thing down. Now it would have been an exit if it closed above the 15, but it never closed above the 15. You just ride it down. I don't remember how far we took this, but this was a really long trade. Most of them don't last this long. This is really unusual for a trade to last this long. But notice it stayed yellow, and then it went to red and stayed selling. You can see the institutions are selling the heck out of the Qs through here. It's no mystery. The SPY super system trade, I just want to kind of run quickly through the results I've had. I don't want to bore with everybody with this, but there are a lot of SPY super system trades, way more than there are the trades we take in the room. But these are my results because I cannot alert on these, and I can't even post them in the room because they're too fast. But I do have a video on how to trade these, and also I point them out when I see them occurring. But a lot of people in the room, this is all they do all day. It's just trade the SPY super system. They're not even doing anything else. So they get a lot of trades. But you can see, like in August, 56, 6 and 2, 56 wins, 6 losses, 2 scratches. That's a lot of trades. In a month, we probably only had 25 regular trades. But I've never had a losing month with the SPY super system myself. But it's important to remember, these will you only have one trade on at a time, and you should have only one trade on a time. And they'll be very short duration trades. Very short duration trades. One candle up to maybe 6 or 7 5-minute candles. All right, and here's November, here's December. Again, big profits, but these are my profits. This is not meant to influence you at all. So again, in October of 2024, this was the SPY super system trades, right? 89% win rate. This was the room, 85% win rate. The room made 74.48. These were my profits, right? I can't say that you would have got these profits. These are the room profits. If you followed the trades in the room, this is what you would have made, because these are all posted trades, right? And by the way, these totals do not include each other. This 74.48 does not include any SPY super system trades, and the room trade does not include any SPY super system trades. They're completely independent. Okay, so that was November, that was December, and here is what we got for the whole quarter, last quarter last year. Quite a bit of money, obviously. All right, so as you can see, this stuff is very successful, right? And it's successful because of this. Here's the SPY super system. Here's the SPY super system trade. Just going to show you some of them. Then we're going to look at some regular trades, and we'll be done. All right, so this was a SPY super system trade. All right, so here's current time frame momentum right here. Here's where we take the SPY as it goes from red to blue. We take it as it breaks above the VWAP right there. Right? Let me just get a sip of water here. Get a little dry. Okay. So again, here's where we entered the trade. We follow this up as it rides along the 15. That becomes our stop. We get extended, starts to flatten out. We take it off right there. That's a lot of profit. That's not normal. That was a pretty long trade. Here's another one here. This was 2 candles. See, selling here as it breaks below the 15 with a pop out of the box. You take it there short, right down here and out. Here it is on the new format. See, you take it right here, where it goes from blue to yellow. Take it here, out right there on this bounce. Still was red, by the way, but I was out of it here. And there it is with the new methodology right there. You can see it. I showed you this one before. All right, and this was IWM. This was a fairly long trade here. Again, you can see the institution selling the heck out of it. It breaks below the VWAP right there with a pop out of the box. You take it there and you write it down. The VWAP becomes your stop, and then the 15 becomes your stop as the stock moves down. And then you get out of it right here as it flattens out. Notice it went from red to blue. That's your exit. You didn't even have to wait for that. As soon as it flattens out, you get out. $120 profit per trade. All right, so those are what SPY Super System look like trades. Here's what some of the other trades, these are the normal trades that we take in the room and on the alert service. And this was on a line. And this was set up to be a swing trade, but we ended up taking it just for the day. And we took it right here. The daily chart was nice and bearish, so we wanted to go short. You see how we go from buying right here, the green, to selling right there, and you see it breaks below the VWAP and goes to yellow. As we break below the VWAP, we take it right there. Right, we were in this trade for an hour, and we made 51% profit on this thing as it pulled down. Never really threatened to even come close to the 15 for us, or the VWAP. Very nice trade. And so we just we took 51%, and we just ended the trade for an hour. I didn't think I had to hold it overnight at that point. URGN, this was a long trade. This is where I get in. It was compressing. Went from selling here to buying right here, compressing. Pops up off the 15 right here on the daily chart. See that? It's blue. We take it here. Didn't go far. We just didn't go very far very quick. We had to stay in it, stay in it, stay in it. Notice it stayed above the 15 though. This is your technical support. Technical support's holding. Then we popped up here on this day, gapped up, and we took it off. Right? And just a little tip. If you're in a trade, long, for example, overnight, and you get a gap up in the morning, take the profits. Take the profits right at the open. People like to stay in there and think they get greedy and they think it's going to keep going. Gap ups, they're called gap and goes. Gap with a continuation to the upside is much rarer than a gap and crap, where it gaps and pulls down, a gap and chop. So you want to take it off right near the open on a gap on to the upside on a long and downside for short, because you have two things going for you. You've got a nice move up in the market, right, in your stock. You've got good profits, and because it gapped up, you've got a lot of extra volatility in the premium. The premium gets jacked up because it becomes volatile. So that's going to increase the price that you're going to collect for that premium on that option price. All right, the call. So let's say the stock jumped up to 100 at the open, and your option was going for $3. If it stays at 100 at 9:45, 15 minutes later, it's not going to be at the same level. It's going to go down because of some of the volatility is coming out of this. So the key is on gaps and gifts, take the stock off, take the profits when you get a gap up on a long or a gap down on a short. All right, so there's URGN. Again, we got a nice move up here in that day. NVIDIA, we looked at this one already. This was SMR. We looked at this one already as well. Again, yellow, selling, buying, and this is on the daily chart. Institutions come back in, we take it, and notice it already multi-time frame, current time frame, both green, so we can take a swing trade in that. Nike, this was the famous one. We made 216%. Here's where we took it. Look at the selling going on here. Look at the selling going on. We took it here, and we actually went up money, and then it just kind of moved sideways. But again, it stayed below the 15, and then boom, here's the gap down on the tariffs. We took it off immediately. Immediately in the morning, we took that off. Okay, gap right down to here, and so we took it off. You see what happened the next day? Bounced right back up. Sarepta, same thing. We took a short here, and again, see the red here? Current time frame momentum, multi-time frame momentum trend. Institutions selling. You can tell the institutions are selling here by looking at this. Right, this was a nice long in HIMS, 25% profit. I kind of missed the entry on this one. Actually, I should have entered back here further. I didn't. I don't know why. All right, so those are the charts. That's how you use the SPY super system. Those are the indicators you need. That's all you need. Right? Here's what we do in the room. Straight calls and puts, straddles and strangles, debit spreads, using weekly options expiration, time spreads over earning. We're getting ready to do a bunch of these. We're getting ready to do it because the bank earnings are out now, and we're going into earnings heavy duty in the next couple of weeks. Weekly ATM strategy, I mentioned that. I have a video on this. I have a video on this. I have a video on this. I got a video on the straddles and strangles, and on credit. And then the SPY super system, which is the internal trades, 5-minute trades off the 5-minute candlesticks on the SPYs, Qs, IWM, or stocks that you basically are responsible for yourself. You have to get in and get out. I can't tell you where to do that because they're so quick, but it's a really, really solid setup and a really solid strategy. Okay, so here is the offer that we've got from Rightline for the software and the room and the alert service. You can take a free 2-week trial. You get the alert service, you get the live trading room, my live trading room for 2 weeks, and you'll also get the videos. You get to see the videos. And these things are really, it's about 32 of them. These things are excellent, if I don't say so myself. $396 a quarter after that. If you take this is where it's going to go to. It's going to go to $396. All right. So if you want to save some money, if you just want the alert service, they have a special on the lifetime. This is one-time payment. You get it forever for $24.96. If you want to get it for less period of time, you just call Rory, and he'll give you the offer for that. And also the one-time payment. This is like the no-brainer to me. You get the options live trading room. You get my live trading room forever. You get the SPY super system software forever. You get that on your computer, on your thinkorswim platform. You can use it forever. You don't even have to be in the room. You can trade on your own if you want to, but you do get my room for life. You get the SPY super system forever. You get all the upgrades to it. And we got an upgrade getting ready to come out next week that I'm going to modify it a little bit. I think it's going to be even better than it is now. And then you get the wise way to trade options. This is the masterclass. Those are all the videos that I've got. And then you get the private Discord access as well, as you do on the alert service. Right, $24.96. This is really, to me, this is like a steal to get just to get the software for that price forever. I mean, it really is good. But it comes with the room forever too, so you can come and go as you please in and out of the room. All right, those are our offers. And okay. And again, if you have any questions on variations of this, you maybe get it for a year or 6 months or whatever, you can call Rory and he'll tell you what it would be for that. He can take care of all those questions. Here's his number right here, 786-732-4656. Right, 786-732-4656. And this, by the way, this is a return on what I call return on subscription investment. This is assuming your subscription, the max you'd pay would be $1,600 a year. That would be like the $396. With average trade size of 2,000. This assumes you take all the trades taken, historical results of 40x ROI per year. You're getting 40 times your investment minimum. If you pay, if you took it cheaper, if you took a longer term one, obviously it's going to be a lot more than that. But annual profits have exceeded 40 times the subscription cost. So obviously the subscription has consistently paid for itself many times over. Again, high ROI, simple math and proven results. And of course, the past performance is not indicative of future results. And I can't push the mouse for you. Everybody's responsible for their own trades, always will be. But this is what an indication of what you can produce with it. All right, so there's the offers. I appreciate you being here today so much. Again, I'm kind of winding down from the trading day, so I'm a little tired. But I do appreciate everybody coming into the room. Again, I'm a professional trader. I'm not a professional presenter, so it might not be as smooth as some of the others. But I think the information is very, very useful to people, and hopefully this will help your trading. So have a great afternoon, have a great evening, and trade